Hello, everyone. Welcome back to Curious About Bitcoin. I am your host, Brian Rothenberg. Today, I wanted to go over some things that I'm thinking about with regard to Bitcoin. And today, that's going to be a bunch of things about Bitcoin treasury companies. So, what I'm going to do is share my screen and go over a couple of things that happened today that I thought were pretty cool. So, let me start the share and I'll go from there. I'll start with this one first. So, first thing we have here today is Michael Saylor's post from yesterday. Orange is my preferred color. Michael Saylor, who is the executive chairman of the company STRD, who has the most corporate or owned Bitcoin in the world, typically posts on Sunday when he's going to tweet about a buy on Monday, which is exactly what we saw. So if I go to the next tab there, which I have to unshare to share again, I apologize for this kind of wonkiness, but when we go to the next tab, we will see that this morning Strategy announced that they have acquired an additional 705 Bitcoin, and they achieved their Bitcoin yield of 16.9% year to date. What was interesting about this particular buy is there's more information elsewhere that shows that Strategy used the at the market offerings, not of their common stock MSTR, which is what they've done a lot of recently, but actually of their preferred stock shares. So that's STRK and STRF. So only STRK and STRF ATMs were used this week to purchase Bitcoin, which is new and somewhat exciting with regard to how they've been going about their Bitcoin purchases. Not to be outdone, we also saw a post this morning from Simon Gurovich, who is the CEO of MetaPlanet, a Japanese company that also has a Bitcoin treasury strategy going. And they announced that they acquired 1,088 Bitcoin, so actually acquired more Bitcoin than Strategy did in the past week, bringing their their Bitcoin count to 8,888 Bitcoin compared to Strategy's 580,000 and change for that. But still, really great to see MetaPlanet continuing to add to their Bitcoin treasuries at a fast clip and growing fast. You can see that their Bitcoin yield to date is 225% compared to that 16% I shared for Strategy. So that was this morning. Then this afternoon, there was another post by Strategy, which was that they have announced another new perpetual preferred stock offering, and this is Stride, STRD. And this one is a little bit different from STRF and STRK, and that's kind of what we're going to break down here today. If you click on this link, it'll take you to the prospectus, or not to the prospectus page, but to the page on the Strategy website where the announcement is, where you can see the prospectus, and you can also get a link to the specific presentation that I'm going to go through in just a moment. So what I want to do now is share a couple of pieces from that presentation as we go. And actually, I'm going to switch to sharing my window until I need the sound. So with the Stride offering here, what we see is it's a perpetual preferred stock. It has a par value of $100. It has a dividend of 10% per annum, which is very similar to the STRF. But the preferred stock here can be called back by Strategy in various ways. It does not have to. Strategy does not have to pay dividends on the stock. They probably will to make it more successful in the marketplace. But if they don't pay dividends, they're non-cumulative, which is different from STRF, which we'll see in the presentation a little bit later. But this is the highlights of those pieces there. The other notable piece that I thought was worth sharing came from Feng Li, the CEO of Strategy, talking about the 4242 capital plan and how they are 36% complete with the plan, 56% of the way through the equity, and 16% through the fixed income offerings, which Strife and Strike are a part. As you can kind of see here, the converts, which they haven't been using recently, are also a part, and STRD will be in this group as well, kind of going forward as we continue through the presentation. I'm going to stop sharing here again, just so I can share the next piece with audio. So I have to do that by the tab, and we will hit that next. So here we go.
Coin-backed credit instruments, then STRF is meant to be something similar to an investment grade. It'll be the crown jewel of our preferred stack, and our aim is for Bitcoin credit investors to view that as investment grade, and we'll work to over collateralize that, and to make sure that that is always senior to every other preferred instrument we bring to market. STRK, of course, is a convertible preferred, so it's partly dividend bearing and partly it has conversion right to MSTR common. STRD is really targeted at the high yield market. It's our high yield credit instrument. And if you look at it on this slide, you can see that one of the benefits of STRD is we expect it to yield more than STRF. We expect it to be the highest yielding of the preferred equities that we offer to the market. And we also expect it to be very long duration. So you can see, compared to high yield loans or high yield bonds, this will be a longer duration instrument because it's perpetual with no call. And compared to STRK or to STRF, it should be a higher yielding preferred instrument. And of course, you could find a long duration US Treasury bond, like a 30-year Treasury bond. But our goal is to offer a combination of long duration and high yield for credit investors that are looking for that.
I'm going to stop that particular video there and share the next video that we have from the presentation. Here we go.
Versus STRF. You can see they're pretty similar, except that one is a senior and one is a junior. You can see that the effective yield of STRF has fallen now below 10% because it is traded above par. And our goal with STRD is to just create a higher yielding instrument, and one that will appeal to investors that want the higher yield. We would expect that as the BTC rating of STRF increases, the credit spreads could improve, and we expect that as investors become more comfortable with our Bitcoin collateral, then that will be beneficial. And so, of course, that's good over the long run for our common equity. It gives us a more efficient mechanism, and it gives us a lower cost of capital. But ultimately, we'll have a lot more flexibility to raise capital if we have both of these instruments operating. If we weren't bringing STRD to market, if this offering was simply a secondary offering of STRF, we would be undermining the credit of STRF, and so probably the effective yield would, rather than continue to climb, it might be pressured or held stable. So in fact, we think that it's better for the company to allow the high yield STRD at the same time as the senior STRF. And that gives us the ability to work both ends of the yield curve at the same time. Otherwise, there's not that much difference between the two, except for the fact that there's a cumulative dividend right to STRF, and there are enhanced governance features for STRF in the event that a dividend is missed. And those two things don't come along with STRD.
Pause that one there, and we'll go to the final video. Fair warning, this is the longest of the videos. This one is, I believe, about 3 minutes for what I want to show.
Of those three senior instruments through delivering STRD to the market and growing the STRD preferred equity base. Now, if you look below STRD at the elements that are junior to it, We think that STRIDE adds intelligent leverage to MSTR. Um, STRIDE is a way for us to raise additional capital without diluting the common. So it's quite reasonable that STRIDE could drive the MNAVs north. It could get us to a higher MNAV. Certainly, our plan is to use STRIDE to drive the MNAV to 2, to 3, or to 4, or beyond. And how would you do it? Well, intelligent leverage, and the intelligent leverage of STRIDE is that we've got the leverage of a bond, but the principal is not coming due. And then, of course, we are incurring the dividend obligation, but because it's non-cumulative, it's a much lower risk dividend obligation than, say, a convertible bond. A convertible bond principal does come due, and whatever coupon is an obligation. And STRF is much less risky and much more intelligent leverage than a bond because the principal doesn't come due, but the dividend is cumulative and there are penalty provisions, and so it is a more risky form of leverage than STRIDE. STRIDE gives us the ability potentially to increase our leverage ratio much higher than if we simply relied on convertible bonds or STRF. And if STRF does become or emerge to be viewed as investment grade, then it'll be sitting at a very different point in the yield curve, and it'll be in demand by a very different set of credit investors. And STRIDE will allow us to continue to appeal to a different set of credit investors, even if STRIDE does appreciate to investment grade credit spreads. STRIDE, of course, has another impact on our equity. When the equity capital markets are strong, STRIDE allows us to achieve a higher MNAV. But when the equity capital markets are weak, in the event that, say, our MNAV is less than 2 and we're not enthusiastic about selling equity, we could sell STRIDE in order to acquire Bitcoin until our MNAVs were to appreciate to 2, 3, 4, 5. So we can use STRIDE in order to support a much higher MNAV in lieu of using our equity ATM. Now, in an extreme case where the MNAV were to fall to 1 or below 1 for the equity, STRIDE gives us the option to actually sell STRIDE and then buy our own stock back. And so this is both an intelligent form of leverage to drive up the premium that our equity trades at versus Bitcoin NAV. And it's also a great defensive mechanism in case there were a market dislocation and the common equity were to trade below MNAV. A straightforward strategy for us to recover that would be to simply swap the STRIDE for the STRIDE exposure for the MSTR exposure and capture that difference. It's a very easy way, right, for us to capture the discount and monetize the discount to the benefit of the common stock shareholders when we trade below MNAV, in the same way that we monetize the premium from time to time when we trade at a substantial premium above MNAV.
So that's the part of the presentation I wanted to show. A few comments here that I wanted to just go over, things again on my mind today as we go through this. Last week when I was at the Bitcoin conference, I was at Industry Day on Tuesday, and Michael Saylor addressed a small room of people that was recorded, I believe, and you can see it online. And someone did ask him, what happens if, the stock trades at below 1 MNAV, multiple on net asset value. And Saylor basically said that he would probably find ways to buy back his own stock. And he certainly knew that STRIDE was coming because it's probably something that takes several weeks at least to plan. But now we kind of know that he would use STRIDE, or strategy would use STRIDE, to basically fund buybacks of their own stock if that was more accretive to the common stockholders than to buy Bitcoin with the same money if it's trading below 1 MNAV, which is really interesting. And basically, the entire premise behind Stride is to increase MNAV intelligently. And I go back to that first chart that I showed, the second sort of screen from the roadshow here. And this chart here, this remaining $35 billion, my guess is that they want to fill that up with as much Stride as possible going forward. Now, they've only, basically authorized, I think, $250 million worth, which is not going to be that much of this $42 billion plan, but more to come. The other thing that he alluded to, and I don't think that it was on any of the videos that I showed you, but it's in this presentation, was that today this is for institutional investors and accredited investors, but someday that Stride will have an ATM, an at-the-market offering. So they'll be able to issue Stride in the same way they can issue Strife and Strike or MSTR common stock. So this is a really interesting new piece of information for us as we go forward. The other thing that I thought was really interesting was that, for me, when I first heard about this, I'm like, why the heck would I want to buy this when I could buy this and basically get more rights and the same fixed dividend that's perpetual, that's cumulative for the dividend rather. And this one's non-cumulative, so they can, suspend the dividend in downward cycles of Bitcoin or for whatever reason they choose. And really what's going to happen is the amount of Strife that's out there is going to be dwarfed by the amount of Stride that's out there. And so Stride will trade probably near the par value of $100. Strife and Strike are already trading above $100, their par value, which isn't really surprising for a Strike because, it's convertible at some point in time. So there's upside to Strike, but there's not as much with Strife, but they still expect that to trade at a premium to the par value. Whereas Stride probably will not, which is why it doesn't have the same level of rights as Strife. And Saylor even said, I think in the second video there, that to issue more Strife would basically devalue Strife right away because it would lower the share price in part and probably do other things that I haven't fully thought through. So those were a couple of the thoughts I had there. The last thing that I kind of wanted to raise this evening, I had a conversation with a friend that I met at the Bitcoin conference who is writing a paper about MNAV and things like that. I don't want to, go into too many details there. But one of the things that I took out of that conversation, and I hopefully added value to him in terms of some of the edits and suggestions I had and, information about this presentation. But he said that, because you have this Stride product now, MSTR is safer than Bitcoin. And I don't think that ran through my head before we had that conversation. I was thinking that Bitcoin was kind of savings and, even in a down market, that it would, be less volatile than MSTR or any of the other Bitcoin treasury plays. But with the Stride product, Saylor can kind of put a floor in the stock price in some ways because he can be a net buyer of his own stock if the MNAV trades below 1 by just issuing more Stride once he has the authorization to do so. And that's kind of staggering, right? So they're getting smarter in terms of what they're doing with these plays overall. I just kind of felt like I had to do a video today to talk about some of these things, to go through it in my own head as we're trying to, digest this new offering here. And, in other groups that I'm in, we were all speculating that Saylor will probably issue more different types of securities, right? And there's probably going to be a whole bunch of different types there. So this is probably not the last one, but it's really interesting to see. It'll also be interesting to see how other companies in other markets are able to copy them or, basically have similar offerings there. And I saw a post towards the end of the day from Dylan Leclerc, who's the Bitcoin treasury strategist. I don't know if that's his formal title at Metaplanet. And he said that convertible debt is probably something of the past for Bitcoin treasury companies. And I tend to agree in part and disagree in part. I think he's right for companies like Strategy and Metaplanet. I think he's wrong for other new Bitcoin treasury companies that will probably use a lot of convertible debt immediately to try to grow their Bitcoin yield out of the gate as fast as possible. But in a down Bitcoin market, that could come back to haunt them in various ways. And so those posts are out there. I don't have them to show because I didn't pull them up before this video today, but I think that's everything I wanted to go over. Thank you all for joining me, for sitting through this video that went longer than I was expecting. Hopefully you got something out of it, and I look forward to sharing more with you later. Have a great day wherever you are.